Asya, Sunny and Seher, are you able to hear me? Is my voice audible? Asya, Rinin and Seher, are you able to hear me? Is my voice okay? Okay, how are you doing today? Hi, Sunny. Fine. Fine. Shall we start with the class now? Should we start the class now? Okay, fine. Alright, let's proceed ahead with it. So the topic which we are going to do today is life insurance. Right? Now, when you were surfing the web for life insurance yesterday, what exactly was it that you kept double clicking on? Now, so why do we need an insurance? That is the question, right? A claim is the payment made by the insurer to the insured or claimant on the occurrence of the event specified in the contract. So we often go for a car insurance, right? And if in that case, my car has met with an accident and it is insured. So I am an insurer, and then I will ask the company. I will claim the, I will claim the money from the company, right? So if I have taken the insurance for my car and if an accident occurs, okay, all of a sudden, then company will, pay me the money which is mentioned in the contract signed, so that I can get it mended, right? And we pay the premium every year, right? Right? So what is a claim? A claim is the payment made by the insurer to the insured or claimant on the occurrence of the event specified in the contract in return for the premiums paid for the insured. So for our insurance, we pay premium every year, right? So we pay premium, right, every year for the insurance, for our insured. Yeah. So why we get the insurance done? Why we get this insurance done, and why we pay premium every year for the same? See, we pay it because in that we pay premium every year, and if in that case my suppose I have got a car insurance, okay, and I pay premium every year for the same, some specific amount of as a premium per year, right? And my car is meeting with an accident. What the company I will claim? Is my voice audible? Right, and they are going to pay the money so that the car can be mended, right? Asya, Rinin and Seher, are you able to hear me? Now, what is a claim exactly? How do we define it in terms of insurance language? Hello, hi Prabha. A claim is the demand that the insurer, who is the insurer? We are the insurer, right? Yes. Should redeem the promise made in the contract. The insurer has then to perform his part of the contract, settle the claim after satisfying. Okay, how are you doing today? Himself that all the conditions and requirements for the settlement of the claim have been complied, right? So we claim it, but the companies, if I have, I have taken a car insurance, and so they are going, and if my car meets with an accident and I'm claiming someone, I'm making a claim. So they will verify the claim, and then only they are going to pay us something, right? The specific amount, right? So it's not like they're just going to believe us like that. They will, inquire about it. Okay, they will get satisfied, and if they get satisfied completely, then only they're going to pay us the claim. Fine. All right, let's proceed ahead with it.
So the
Insurer is expected to follow through the following procedure at the start. Whether the policy is in active state or not. So before giving you a claim, they will check, okay, whether the policy is in active state or not.
Then you will
whether the policy holder has performed his part. So they are also going to check whether you are paying the premium or not.
You kept double clicking
The policy status with regard to the payment of premium, age, admission, outstanding loan or interest, if any legal restrictions such as under MVP Act, foreign exchange regulations, report of investigation, police report, if any. So they're going to, they just won't pay you claim like that. They are going to, see whether your policy is in active state or not. You might be fooling them, okay? So they will check this first.
So why do we
second thing they're going to check is the question. Whether still
a claim is a payment made by the
they're going to check whether you have performed your duty or not.
Of the event specified in the contract.
Right?
So we often go for a
whether insured event has taken place or not. Sometimes people make false.
My car
so
has
they will
met
just
with an
check
accident
to
and
ensure that someone
I
is
am
not
an
making a false
insurer,
claim.
and then I will ask the company. I will claim the I will claim the money from the company. Right? So if I have taken the insurance for my car and if an accident occurs, okay, all of a sudden, okay, then company will pay me the money which is mentioned
What
in the
are the
contract
obligations
signed
assumed under the
so that
contract
I
which are required to
get
be
it
performed,
valid,
like payments of bonus, survival benefits, and other things?
and we pay the premium every year, right? Right? So what is a claim? A claim is a payment
Who
made
are
by
the persons
insurer
entitled to
insured or claimant
demand
for the occurrence
performance?
of the event
Submission of claim
specified
form.
in the contract in return
I'll
for the
just come to
premiums
it.
paid for the insured. So for our insurance, we pay
Submission
premium
of
every
primary
year,
level
right?
documents. Now, what is a maturity claim?
pay
Under
premium,
endowment
right, every
policy,
year
the SA to be
for the
paid
insurance,
when the term of the
for our
policy is
insured.
over. The amount payable on maturity is the SA less than any debt like loan and interest or outstanding premium.
why we
get the insurance profit
done?
policy, the bonuses, why we get this insurance done, and why we pay our
premium
policy
every year for
insured. We get some outstanding
we pay
amount because in that we pay premium every year, and if in that
if you have
case
taken
my
any loan on that
suppose I
policy,
have
they'll
cut
cut
that,
that
and then and in
the
that
remaining
I
thing
pay
will be
premium
your
every year,
outstanding amount,
some
which you're going to get.
specific amount of as a premium per year, right? And if any bonuses are there on your
and
policy,
my car
then
is
meeting with an accident, what fine? The company I will claim, right? And they are going to pay the money so that the car can be mended, right? Yeah. Now, what is a claim exactly? How do we define it in terms of insurance language? Hi Prabha. A claim is the demand that the insurer, who is the insurer? We are the insurer, right? Advance intimation is sent to the promise made in the informing him about the maturity and requesting for submission of discharge voucher and policy documents. So see, if I have taken some himself that all the conditions and requirements for the settlement of the claim have been complied, right? Then we claim it, but the companies, if I have like official letters, I have taken a car policy is about to mature, so they are going, and if my car discharge voucher and I am claiming them money, I'm making a claim. So they will verify the claim and then only they are going to pay something, right? It means some assured specific amount. Clear, right? Clear, everyone? So it's not like they are just going to believe us like that. They will, inquire about insurance policy. Okay, they will get satisfied, and if they get satisfied, can you give me an example? Then only they will pay us the claim. Can you give me an example? Can you cite out one example? Insurer is expected to follow through the following procedure at the start. Whether the policy is in active state or not. So before giving you a claim, they will check. Okay, whether the policy is in active state or not. Whether the policy holder has performed his part. So they are also going to check whether you are paying the premium or not. Satisfy. The policy status with regard to the payment of premium, age, admission, outstanding loan or interest, if any legal restrictions such as under MVP Act, foreign exchange regulations, report of investigation, police report, if any. Okay. So there are no assignments. The identity of the policy holder is proved that stand that your policy is in active state or not, right? You might be fooling them. Okay. So they will check this first. All the premiums. Second thing they are going to check is if you have not paid a single premium, then you won't get any benefit. They are going to check whether you have performed your duty or paid all premium, and if you have not paid a single some premiums like in between, you have missed out. Whether insured event has taken place or not. Sometimes people make false claims. In that case, what is going to happen is they are going to ensure that someone is not making a false claim. The identity of the policy holder is proved. They are also going to they will also need your identity proof. Okay, clear? Yeah, correct. Is it clear, everyone? Okay. 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 Is it clear? Once the documents are received, what are the obligations assumed under the contract which are required to be performed, like payments of bonus, survival benefits, and everything? Then they are going to send you the post-dated check few days in advance. In case the original policy is reported to be lost, sometimes you may even lose the policy. You know, the matter is examined in detail to see. Sometimes it's who are the persons entitled to demand. I might be taking the policy in a bag and somebody might steal. I might leave it in a bus or a train, right? So in that case, of primary level document lost. Then in that case, what is going to happen? They will check the genuineness. Now, what is a maturity claim? Under endowment policies, the SA to be paid when the term of the policy is over. The amount payable on maturity is the SA less than any debt like loan and interest or outstanding to ascertain the genuineness of claim. If it is a profit policy, the bonuses, indemnity and public notification if found. See, when our policy matures, we get some under MVP Act policy the proceed. Okay. And if you have taken any loan on that policy, they'll cut that and policy will be paid. The remaining thing will be your outstanding. If there are no trustees, the official trustee will step in. But if the beneficiaries and if any bonuses are there on your policy, then they are going to be made directly to them without the information of trustee. The policy holder is not expected to sign the discharge. See, when it comes to absolute assignment, the payment will be made to the assignee. If the assignment is conditional reverting to the life assured on maturity, payment can be made to the assured himself. However, it will be prudent to check that assignee has no outstanding claims. You don't know the meaning of MVP? Advance intimation is sent to the insured, informing him about the maturity and requesting for submission of discharge voucher and policy document. So see, if I have taken some, policy and the date of maturation is suppose October 1, 2014. Then 15 days to 20 days before, they're going to send me the letter, official letter that, okay, your policy is about to mature and you have to submit the discharge voucher and policy document, then only married women property. Outstanding amount. That means married women property. Right? SA means sum assured. Clear? Yes. Clear, everyone? Is it clear, Nixon? So what all insurance policies we take? Can you let me know? Can you give me an example? That is married women policy. Do you know about it? Can you give me an example? Do you know about anyone knows about married women policy? MVP Act. Auto, life policy. Okay, let me tell you that. Medical insurance. Correct. See, according to MVP Act, the insurer has to satisfy. I'll just post my document on the board. Give me a second. See, MVP is Married Women Act. Okay. Okay. And what there are no assignments. The identity of the policy holder is proved. The age stands admitted. Right? All the premiums are paid. So if you have not paid a single premium, then you won't get any benefits. Okay. So they will check all these things that you have paid all premium, and if you have not paid a married women property act, what does that? Then in that case, what is going to happen is right. In that case, what is going to happen is they are going to deduct that amount. The age stands admitted, the identity of the policy holder is. Does anyone know about that act? They will also need your identity proof. Okay, clear? Yeah, correct. Is it clear, everyone? Does anyone knows about it? Once the documents are received, the insurer sends a post-dated check few days in advance. See, right? Let me put the document. Once they, verify everything, then they are going to send you the post-dated check. When it comes to the marriage, the original property act can protect the life insurance that claim benefit from the creditors and ensure the matter is examined in detail to see some lack of awareness and loss of control prevents insured from going from this option. I might be taking that policy in the bag and somebody might run a business. I might leave it in a bus or a train. Okay, right? So in that case, the policy is doing their best to then in that case, what is going to happen? They will check the genuineness. Luckily for his wife, Harish has purchased a term life insurance policy choosing the option of section 6 of MVP Act. You are making it ensure that Harish's wife got the death benefit. Fine, but many are not so lucky. So see, to ascertain the genuineness of claim and is settled on the basis of indemnity and public notification is found genuine.
And
Under MVP Act policy, the proceed. Okay. Yes. So Section 6 of the MVP Act policy will be paid to buy a policy. If there are no trustees, the official trustee will step in. But if the beneficiaries are major and complete to contract beneficiaries, that is can be made directly to them without the intervention of trustee. The policy holder is not expected to sign the discharge. Even a married woman can buy MVP policy on her name and with her children as beneficiaries. When it comes to though the husband will not sign it, the payment will be made to the assignment. If the assignment is conditional, reversing to the life assured on maturity, payment can be made to the assured himself. However, it will be prudent to check that assignee has no outstanding here. You don't know the meaning of MVP? Okay. So see, if I'm taking a MVP, if I'm following this act, I'm MVP insurance policy is free from creditors and court attachments. The welfare of wife and children are protected with utmost care. So see, if somebody has taken some loan from somewhere and they die, and he dies, he or she dies, he dies. Okay, then all his property won't go to the credit. Some people from whom he might have taken loan, they might married women property. That means married women act. Your husband and your wife and children are going to get that. Fine. A policy under MVP Act is a good feature for families that have debt. To clear extent, MVP Act is applicable for all married women of all religions. There is no need for creating a trust under the Trust Act. The policy holder has the option to change the trustee at any point of time. That is married women policy. Do you know about it? Do you know about anyone knows about married women policy? MVP Act, and what is the issue? Are you not able to follow it? So what is MVP Act? Can you just tell me in simple language? Okay, let me tell you that. Okay. What are the benefits of MVP Act? See, according to MVP Act, I'll just post one document on the husband is dead. Give me a second. Okay. In order to save the property from the creditors, this act comes into play. See, MVP is Married Women Act. So if this insurance has been taken, guidelines, all under that, if the husband is dying, in that case, only wife or kids will get the premium. Fine. Now, the Married Women Property Act, what does that say? That is the question, right? Okay. Yes. Okay. Does anyone knows about that act? So in that case, only your trustees can take advantage of it, right? In case of absolute assignment, the payment will does anyone knows about it? If the assignment is conditional, reverting to the life assured on maturity, payment can be made to the assured himself. Sometimes, let me tell you in detail, not on the date of maturity, but later in installment. In such cases, while the decision to settle may be taken on the date of maturity, the settlement process will continue for 3 years. When it comes to the Married Women Property Act, can protect the life insurance debt benefit from the creditors and ensure that your wife and children are known about it. Okay, please. Lack of awareness and loss of control prevents insured from going survival benefit claim. Okay. Now let me give you an example. Harish was running business on borrowed capital. Yeah, please let me know. After a sudden demise, his creditor did their best to go after Harish assets. Okay? Yeah. Luckily for his wife, Harish has purchased a term life insurance policy choosing the option of Section 6 of MVP Act. It ensured that Harish's wife got the death benefit. When it comes many are not so lucky, benefit claim. What is that? Anyone knows about it? Or should I tell you about it? See, it is simply the amount that of a particular person in his wife and term in endowment policy will survive till end of his death. What is endowment? So Section what is endowment? The MVP Act allows an individual to buy a policy for himself under endowment, create a trust for the state. There is no need for creating a trust under the Trust Act. The beneficiaries, that is wife and children, can also be trustees. The policy holder has the option to change the trustees at any point of time. Even a married woman can buy MVP policy on her name and with her children as beneficiaries. Though the husband will not get anything from the policy, it will be considered as the endowment is a large amount of money that has been given to school and hospital and can be used for its creation and support. Fine. Endowment is a large amount of money which you give to some school or hospital. Okay, trust kind of a thing. Yeah. So see, if I'm taking an survival benefit, if I'm following this amount that you get at the end of the term in endowment creditors and survive till end of term. The welfare of wife and children are protected with utmost care. Is it clear what is endowment? See, if somebody has taken some loan for large amount of money and he dies, he or she dies, charity for a hospital, then all his property won't go to the credit. Fine. See, some people from whom he might have taken loan, they might be after his property. A survival benefit is paid to your husband and your wife and children are going to get that. The procedure will be similar to the under MVP Act is a good feature for families that have debt. MVP Act is applicable for all married women of all religions. There is no need for creating an insured sense, advance intimidation and discharge voucher and the life assured is required to return the same duly stamped. Signed, witnessed and signed the original policy document also for necessary endorsement. Therefore, post-dated checks will be sent in. Next one, what is the issue? Are you not able to follow it? If the policy is reported to be lost, what is MVP Act? Can you just tell me the die after the date when the survival? What are the benefits of MVP Act? It is settled. Now, if the policy is reported to be lost, insurers are unlikely to settle on the basis of an indemnity. In order to save the property from the creditors, this Act policy remains in force. Hence, the insured is advised to obtain a duplicate policy. Fine. So here the insurance has been taken, okay, and if the insured dies, in that case only survival benefit was due, but before it is settled, the survival benefit will not be paid to the nominee. Only the death claim will be paid to the nominee. Fine. So he won't get the survival benefit if he is dead. Fine. He'll just get the death claim. What is death claim? Now, let's talk about death claim. Okay, fine. What is death claim? Yes. What is death claim? Anyone knows about it? Please let me know. So in that case, only death claim is the request by the beneficiary of a life insurance policy to the insurance company to make the payment under the terms of assignment. The payment will be made to the assignment. So if the assignment is the beneficiary will request the life assured on maturity. Payment can be made to the assured. So request by the beneficiary of the life insurance claims may be payable not on the date of maturity but later in installment. The insurance company to make payment under the terms of may be taken on the date of maturity. The settlement process will continue for few years. The procedures in settling a death claim are more complex than in the case of maturity. Survival benefit is mainly because the facts relating to have you ever heard about it to be studied in survival identities of claimants have to be established. The death claim action is initiated with the survival benefit from nominee, assignee, relative of life, short employer, agent, development officer. Yeah, please let me know. The insurer need not wait till the receipt of intimation. They may even take note of the information received from the newspaper reports, media, provided identity of the deceased is established. No, they won't claim it. Beneficiaries will claim it. When it comes to survival benefit claim, if I am taking a policy, I will have second nominee right? And if I am dying, he or she will simply the amount that you get at the end of term in endowment policies if you survive till end of term. What is endowment? What is endowment? Anyone knows about it? Please let me know. So if I am dead, why I am going to claim it? How can I claim it? Right? What is the meaning of word endowment? So what is that? Beneficiary endowment is a large amount of money that has been given to schools have you ever and hospital have you ever taken used for its creation and support. Fine. You are the first nominee. Endowment is a large amount of money which you give to some school or hospital. Okay, trust in every policy you will find two nominees, right? So what is this survival benefit claim? Is over there the amount that you get at the end of the term in endowment policies if you survive till end of term. Okay, fine. Is it clear what is endowment? Large amount of money given as a charity for a hospital. And the following will be necessary. Is it clear? Are you able to find? Asya, Sunny, George, Praveen, Nixon, Gracie, Rajiv and Tiju. Okay, a survival
I
benefit
move
is
ahead with
paid
something,
during the
can I know
currency
what
of the
is the
policy
definition
before
of a
the date of
beneficiary?
maturity.
What is beneficiary?
Procedure will be similar to the payment of maturity claims.
What is the meaning of word beneficiary
Yeah.
in accordance with the
The insured sends advance intimidation and discharge voucher, and the life assured is required to return the same.
What is the meaning of word beneficiary?
Sign, witness, and sign the original policy document, also for necessary endorsement.
Beneficiary
Therefore,
is like
post
heir,
effective
heiress,
tenant,
inheritor, a person who will get the advantage of something.
Fine. If the policy is reported to be lost, what will happen in that case? If the insured
Exactly.
dies after the date when the survival benefit was due, but before it is settled.
Spelling of nominee is wrong. It should be N-O-M-I.
And if the policy is reported to be lost, insurers are unlikely to settle on the basis of an indemnity, as in done in case of maturity claim, because after the
before
payment of
settling
survival benefit,
death
policy
claim,
remains
these
in force.
documents
Hence
are very
the insured
necessary.
is advised
Otherwise,
to
it won't
obtain
be
duplicate policy. Policy document, deeds
Here
of
they can give
assignment,
a duplicate
proof
policy.
of age, if not already submitted. And if the insured dies after the date when the survival benefit was due, but before it is settled, the survival benefit will not be paid to the nominee. Only the death claim will be paid to the nominee. Fine? Legal evidence
You
of
won't get the
signing of
survival
policy is
benefit
not
if he is dead.
assigned or
You
nominated
just
form
get
of
the death
discharge
claim.
executed and witnessed. Fine? What is death claim? And see, if the death is occurring within 3 years from the commencement of the policy or from revival. What is death claim? Following additional requirements may be asked. So if someone dies after taking if someone dies after 3 years of taking the policy, in that case, what
Anyone knows about it? Please let me know.
we need additional documents to make that claim. Fine? See, death claim is the request by the beneficiary of a life insurance policy to the insurance company to make the payment under the terms of policy, right? So if so beneficiary will request the same, right? So request by the beneficiary of a life insurance. Clear? Now, what are additional
The
insurance
insurance
company to
company
make payments under the
required
terms
in
of
that
policy? Statement from the last medical attendant giving details of last illness and treatment. The procedures from getting a death claim are more complex than in the case of maturity. Statement from the mainly because the facts relating to death has to be studied and identities of claimants have to be established. The death claim action is initiated with the receipt of intimation from nominee, assignee, relative of life assured, employer, agent, development. If the life assured has an unnatural, insurer need not to wait till the receipt of intimation. They may even take note of the information received from the medical reports and provided post-mortem report is established. Would be asked and examined. Then only one will get it. They won't claim it. Beneficiaries will claim it. So see, if the person has died,
if I'm taking a policy, I will have second nominee in that, right?
You know, they
if I am dying, he or she will get
on a panchnama or something, and they will, they will go for a special inquiry, and then only the beneficiary can get the benefit. So if I am dead, why I am going to claim it? It is quite unlikely that the matter may go to court, which can be sympathetic to the claimant because they are weaker parties. Hence, the insurer has to prove beyond any doubt that there has been a suppression of material facts duly supported by necessary evidence. In many cases, the insurer may not be able to garner enough evidence to repudiate the claim.
Have you ever
suspicion
have you ever taken
any policy? So sometimes, they
in which you are the first nominee and you might be giving someone else as a second
might be
nominee?
responsible for the death. Suspicion might be there,
But they
policy
policy
will find two nominees, right?
In case of a death of a
Ultimately,
first
such
nominee,
claims
the
have
first
to be
second
paid,
nominee
but
can
the
claim
insurer
it.
goes through the process of inquiry. In case of a death claim, early death claim, which enables them to prove the underwriting standards and also identify the agents and regions which are prone to more early claims. Fine? And the following will be necessary. Is it clear? Are you able to follow? Asya, Sanyesh, there is no nomination or assignment, the claimant would have to prove his title through legal process under relevant law. Okay. Before I move ahead with something, can I know what is the definition of a beneficiary? What is beneficiary? Death claims occurring within 2 years from the date of commencement of policy or renewal of policy.
What is the
very
word beneficiary in accordance
if
with
I
the
die
law?
after taking if I die within 2 years after taking a policy, it would be a very, very early claim. Death claims
What is the
occurring
meaning of
and
word
between 2 to 3 years from the date of commencement of policy is classified as an early claim. In all cases like heir, and inheritors,
investigation will be done by the
who will
insurer
get the
to make sure
advantage
that the
of
claim
something.
is genuine.
Fine. Exactly, Rishi. Exactly. Nominee. But next to spelling of nominee is wrong. It should be Nominee. Yes. Is it clear? See, before settling a death claim, these documents are very necessary, otherwise it won't be settled. Policy documents, deeds of assignment, proof of age if not already submitted. Yes, no. Certificate of death is also important. If that is not there, they won't, the beneficiary won't
Are
be
you
able
able to follow what I am teaching you now?
Legal evidence of title if the policy is not assigned or nominated, form of discharge executed. These benefits are conditional or on conclusive evidence that all the eligibility conditions are satisfied and that the exclusions do not apply. The conditions are that if the death has turned violent within 3 years from the commencement of the policy or from revival. In case of following additional requirement may be external, so it's not self-inflicted. Otherwise, 3 years after 3 years get any taking the policy. Death must that case what is going to as a result of injuries caused by need additional documents. Death must occur within 120 days or such other period as may be specified. Fine. The expulsions are intentional self-injury, attempted suicide, immorality, intoxication, accidents while engaged in civil aviation or aeronautics other than as passenger, injuries resulting from riots, civil commotion. Clear? Fine? Now, what all additional documents are required in that case? Statement from the last medical attendant giving details of last illness. These are situations statement from the policy has lapsed and nothing is stable, yet the insurance from the person who has attended last rise and has claimed the statement from the employer claim in these employed showing the details in full in the following circumstances after deducting the outstanding premium with interest. In both the cases, the policy could have been revived by just paying the arrears of the life assured has an unnatural death, like suicide, accident, unknown. After 3 years, if the death claim arises within 6 months from the analyzer. After 5 years, if the death claim arises, would be asked 12 months from the date. Then only one can get the claim, depending on preliminary special inquiry may be ordered. If the premiums have been paid for a period of 3 years but less than 5 years, and in case of that policy holder, they need funds from the report or date of first unpaid premium and full civil amount is paid to the beneficiary for a special inquiry. This is called claim, and then only the beneficiary can get. If I have paid the premium for 3 years, but it is like 3 years claim, but it is less than 5 years. And if I am unlikely, then the matter may go to court with date of 5 and first unpaid they are weaker part. Hence, the insurer has to come assured any doubt that there has been a separation of material tax duly supported by necessary evidence. Is it clear, everyone? In many cases, the insurer may not be able to garner enough evidence to repudiate the claim despite strong suspicion and even after extensive inquiry. If the premiums have been paid for 5 years and above, the claim concession is extended for a period of 12 months. And this is extended concession, but they might not. If I am paying the premium for 5 years, and above, the claim concession is extended. Ultimately, such claims have to be paid of 12 months. The insurer goes to the process inquiry in case of a death claim, early death claim, which enables them to prove the underwriting standards and also identify the that is falling due, which are falling due to fine in the policy year of death will be recovered. Fine. In case there is no nomination or assignment, the claimant would have to prove his title through legal process under relevant law of succession. Fine. And death claims occurring within 2 years from the date of commencement of policy or renewal of policy is called very early claim. So if I die after taking if I die within 2 years after taking a policy, it will be very early. Then they might be wondering if the person has died. The date of commencement of policy is classified as an early claim. In that case, if they are not returning back home, investigation will be done by the people might be making predictions that he or she might not be alive. Sometimes a person is reported missing without any information about his whereabouts.
Indian Evidence Act provides for presumption of death in such cases if he has not been heard from 7 years. So if I get lost and if I am not able to, meet my family members don't get any news about me for 7 years, I will be declared as dead. Okay. As per the Indian government. Fine. Accidents and disability. In that case, if I have some policy, if I might have purchased the policy. Okay, after 7 years, I will be declared as dead. Okay, and the beneficiaries can claim the benefits of that policy. Fine. Are you able to follow what I am teaching you now? Is it clear? See. The accidents and disability. If the nominee or heirs claim that the life insurance is missing and must be presumed to be dead, insurance is evidence that all the eligibility from a combined and that the exclusions do not. So if it has been 7 years, someone goes missing and accident must be caused by external violence means not self-inflicted, they will be considered as inflicted. Fine. So in case of it is necessary that the premium should be paid with the full and extreme presumption of self-infliction. Otherwise, the insurance may act on its own, provided that there is a strong circumstance as a result of injury to show that the life insured could not be survived a fatal within 120 days or such. Insurers, as a matter of concession, waive the premium during the 7-year period. Fine. The expulsions are when intentional self-injury, attempted suicide, immorality, intoxication, I am not able to contact my family while engaged what if they are aviation, so I will be declared as dead. Other than if I am coming back, then resulting from riots, obviously I will consider as living. Okay. Claim concession. Is it clear? These are situations when, though the policy has lapsed, if they are not able to if they are not hearing from me for 7 years, then they will be, I will be declared as dead. But if I can return back after 7 years, then obviously I will be alive, deducting the outstanding premium, right? In both the cases, the policy could have been revived by just paying the arrears of premium, and no proof of good health would have been necessary. Fine. After 3 years, if the death claim arises within 6 months from the date of lapse. After 5 years, if the death claim arises, if he comes back, then if the insurer comes to know about it, you will have to return it back. Otherwise, they will sue you for the same. If the premiums have been paid for a period of 3 years but less than 5 years, and in case of death of policy holder within 6 months from the date of first unpaid premium, the full sum assured is paid to the beneficiary. This is called claim. Missing person. Okay, now. So if I have paid the premium for 3 years, okay, but it is like 3 years, but it is less than 5 years. And if I am dying within 6 months because the date of as per the Indian First Unpaid Act, if a person is mentally sum assured is paid to the beneficiary. And this is a court of law is required to appoint a person to act as a guardian to manage the properties of the lunatic. Lunatic means is it clear? Whenever required, the discharge will be signed by the guardian only. If the person has recovered from mental disorder, a medical certificate to that effect would be necessary so that he can get the claim over the property. Fine. If the premiums have been paid for 5 years and above, the claim concession is extended for a period of 12 months. And this is extended claim concession. So if I am paying the premium for 5 years, okay, and above, the claim concession is extended for a period of 12 months. This is extended claim concession. In both the above cases, unpaid premium that has fallen due will be falling due in the policy year of death will be recovered. Okay? Any order from a court or other judicial authority with reference to the policy monies has to be respected. Other precautions. If the life assured is reported to have died before a maturity date, the claim has to be treated as a death claim and processed accordingly. But if the insured is reported to have died after the date of maturity, but before the receipt is discharged, the claim is to be treated as a maturity claim and paid to legal heirs. Fine. Presumption means what? That means they might be wondering if the person has died or not. Is it clear? Sometimes people may go missing. Okay, in that case, if they are not returning back home, payment of claim
might be
amount
making,
to non-residents
predictions
are
that he or she
governed
might
by the
not be
FEMA
alive.
and regulations
Okay.
made thereunder.
Sometimes a person is reported missing without any information about his whereabouts.
What is the full form of
Indian
FEMA?
Evidence
What is
Act
the full
provides
form
for
of FEMA?
presumption of death in such cases if he has not been heard from 7 years. So if I get lost and if I am not able to, my family members don't get any news about me for
Foreign
7 years,
Exchange
I will be
Management Act.
declared as
Someone is,
dead.
non-residential of
As
India.
per the Indian government. Fine?
Okay.
NRI, like in that case, if I have some,
The payment of their claim is guarded under FEMA. FEMA, the full form of FEMA
after
is
7 years, I will be declared
Foreign
as
Exchange
dead.
Management Act.
Okay, and the beneficiaries can claim the benefits of that policy. Fine? Is it clear? Yeah. If the
Payment
nominee
of
or
claim
heirs
amount
claim that the
to
life insured is
non-residents are
missing and
governed by
must be
FEMA and
presumed to be
regulations
dead,
made
insurers insists on
If the policy
decree
is
from a
financed by who?
competent
The
court.
policy belongs to who and policy
So
money
if
is
it has been
given
7
to the
years, if
partner.
someone goes missing
What
and
is HUF?
family doesn't hear from them for 7
What is
years,
that?
they will be considered as dead.
Does anyone
It
know
is
about
necessary that the premium should be paid till the court decrees presumption of death. In special circumstances, the insurer may act on its own, provided that there is strong circumstantial evidence to show that the life insured could not be survived a fatal accident or hazard. Insurers, as a matter of concession, waive the
What is
premiums
who?
during the 7-year period. Fine?
Who means Hindu undivided family.
Then obviously, see, if I am being declared dead, I am not able
do you
to
know
contact
anything
my
about
family
it?
for 7 years. And what if they are? See, I will be declared as dead.
Does
dead.
anyone know?
But if
the
I am
policy
coming
is
back, then
financed by
what?
who?
Obviously,
Policy
I will
belongs to who
consider
and
as
policy
living.
money would be payable to Carta of who? No. So do you know anything about HUF, Hindu this Undivided Family Act?
See,
Does anyone know anything about?
if they are not hearing from me for 7 years,
Hindu
then
Undivided
they will
Family
be,
Act.
I will be
Do you
declared
know
as dead.
anything
But
about
if I am
it? What is
if I can return back after 7 years, then
First
obviously
of all,
I will
let's
be
see
alive.
this what is who.
Right? Common sense.
HUF.
Right?
And
Right,
who or
Swati?
Hindu Undivided Family is a separate tax entity in addition to individuals person who are members of such family. If you fall under that, what will happen? If you are Hindu, Buddhist, Jain or Sikh, okay, you can have HUF as a separate tax entity. You can claim all tax benefits.
the insurer comes to know
Right
about
tax
it, you will
and
have to
income
return
tax.
it back.
And who is eligible for those?
Otherwise,
Otherwise,
they will
two resident
sue
Indian
you
who
for
is
the
not a senior citizen. It
would
can
be
own
legal,
property
right?
and can also have its own business. So I'll just write it down. Police missing person. So this is for saving tax actually. Who? Now, let me put the details on the board. As per the Indian Lunacy Act, if a person is mentally deranged, if the court of law is required to appoint a person to act as a guardian to manage the properties of the lunatic. Lunatic means disabled. Whenever required, the discharge will be signed by the guardian only. If the person has recovered from mental disorder, a medical certificate to that effect would be necessary so that he can get the claim over the property. Fine? He or she, not he. Alright. Let me teach you about it. Is it clear? Alright. See, let's learn about this. See, this a very effective and legal way advised by chartered accountants to save who? Taxes who? Hindu undivided family. In India, there are many families which are undivided and income earned by such families are joint income as compared to individual. Any order from a court or other judicial authority with reference to the policy monies has to be respected. Now, as these are joint incomes and not individual incomes, these incomes cannot be taxed in the hands of any specific
the life
individual
assured
and are
is
therefore
reported
taxed
to have
in the hands
died
of the whole
before
family. A maturity date, the claim has to be treated as these are taxed in the hands of the family. The family insured is separate PAN card as compared to individual members of the date of maturity, but before the respective who have separate PAN to be treated as a maturity claim and paid to legal heirs. So this is for like saving tax. Basically, the logic behind forming and who is to save tax to avail the benefits of an extra PAN card legally. Fine? Because the whole family will have one PAN card, and they will have individual PAN card.
Payment of claim
As the
amount
income of
to
the family is not
non-residents
taxed in
are
the hands of any
governed by the
specific
FIMA,
individual,
and
a new PAN card is
regulations
allotted
based
to the
thereof.
who, and tax will be paid by the family using this PAN card.
What is the
Yes.
full form of FIMA? What
As
is the
a
full
new-
form
as
of
a new
FIMA?
PAN card would be allotted to the whole family, it will enjoy the benefits of income tax slab rate. That is, income would be tax-free up to a specified limit and would
Foreign
then be taxed
Exchange
progressively
Management
at
Act.
10%,
Someone is,
20%,
you know,
30%, resulting in tax.
non-residential of India.
Fine?
Okay. NRIs, like NRIs. They, the payment of their
Now, let
claim
me
is
give you some
guarded under
examples.
FIMA. FIMA, the full form of FIMA is Foreign Exchange Management Act. See, how creating a Hindu undivided family account would result in tax saving would become clearer with the help of an example. Let's assume there are 4 members in the family, husband, wife and 2 children. The income of husband is rupees 25 lakhs and wife
Payment
is
of claim
18
amount
lakhs.
to
They also have an
non-residents are
governed
governed by
property
FIMA
from which they
regulations
have the
based
earning of their under. If the policy
The
is
rent from
financed
such
by
property
who?
would either be
The
taxed
policy
in the
belongs
hands
to
of
who and
husband or
policy money
wife
would
would
be
be payable to the
the tax
part of who.
What in the hands of
husband?
the husband who is currently in the 30%
What is
income
that?
slab category would be required to pay 30%. Does
That
anyone
is
know 2.4
2.4
lakhs as tax? And if it is taxed in the hands of wife, she will have to pay what? Again, she is going to pay this 2.4 lakhs. But if it is taxed equally in the hands of both husband and wife, rupees 4 lakhs each, both the husband and wife would be required to pay 30%. That is 1 point.
What is who?
So this is how they can save 1 lakh.
Who means
Hindu
1.2.
undivided family, right? 1,20,000, right? Do you know anything
Is it
about
clear?
it to everyone now? Does anyone know if the policy is financed by who? The policy belongs to who and policy money would be payable to Carta of who? No. So do you know anything about HUF, this Undivided Family Act? Does anyone knows anything about it? No. Hindu
Let's
Undivided
proceed.
Family
Let's
Act. Do you know anything about it? What is that? Back to the PPT. See, first of all, let's deal with what is who, right? If the intimation of death is received in Hindu undivided family is a separate tax entity in
there
addition
is
to
reason to be
individual persons who are members of
matter
that
can be
family.
decided
If you-
only after
if you
detailed
fall under that,
investigation.
what will happen? Fine. If you are Hindu, Buddhist, Jain or Sikh, okay, you can have HUF as a separate tax entity. You can claim all tax benefits under wealth tax and income tax. And who is eligible for those exemptions that are available to resident
clear?
Indian who is not a senior citizen. It can own property and can also have its own business. So I'll just write it down. Okay, so this is for saving tax. Now, non-life insurance claims. What are those? Now, let me put the details on the board. Is everyone there? Payments of claims is primary services insurance to the public. Property settlements of claim required a sound knowledge of law, principles and practices governing insurance contracts and thorough knowledge of policy terms and conditions. The settlements of claim involve examination of the laws in relation to coverage under the policy in compliance with policy terms and conditions and warranty. Doctrines of proximate cause provides guidelines to decide whether the loss is caused by an insured peril or an accepted peril. A very effective and legal way advised by chartered accountants to the burden or onus of proof that the loss is Hindu undivided family upon the insured. In India, there are many families which are undivided and income earned by such families are joint income as compared to individual income. Right? Now, as these are joint incomes and not individual incomes, these incomes cannot be taxed in the hands of any specific individual and are therefore taxed in the hands of the whole insurer. Fine? As these are taxed in the hands of the family, the family has separate PAN card as compared to
Survey
individual
report will
members of
indicate
the
whether or not the warranties have been
who have
complied with.
separate government of utmost good faith by the insured is to be verified. So this is for like
After
saving
the
tax.
verification,
Basically,
the
the
amount
logic
taken
behind
has
forming
been worked out
them
which
would
would
depend
save
on the tax
some
insured
to avail the benefits of an extra PAN card
value of the salvage application
Fine.
of conditions of average
Because the whole
application
family will have money. PAN card, and they will have individual PAN cards as well. As the income of the family is not taxed in the hands of any
can be
specific
categorized
individual,
as
a new PAN card
standard,
allotted to
non-standard,
the
and
and tax will be paid by the family using.
Do you have
this
any
PAN
idea
card.
about it?
Yes. As a new PAN card would be allotted to the whole family, it will enjoy the benefits of income tax slab rate. That is, income would be tax free up to a specified limit and would then be taxed progressively at 10%, 20%, 30%.
Do you have any idea about
it? Anyone out there? Fine. What is the expert here? Fine. Now, let me give you some examples. See, how creating a Hindu undivided family account would result in tax saving would become clearer with the help of an example. Let's assume there are 4 members in the family, husband, wife and 2 children. Correct. The income of husband is rupees 25 lakhs and wife is 18 lakhs. They also have an ancestral property from which they have the earning of 8 lakhs. The rent from such property would either be taxed in the hands of husband or wife.
In the next
tax fine in the hands of husband. The
If you
husband
have
is
any
currently
questions
the
from whatever I have taught today,
category
please
would
do
be
ask
required
me.
to pay 30%. That means 2.4 lakhs as tax. And if it is taxed in the hands of wife, she will have to pay what? Again, she is going to pay this 2.4 lakhs. But if it is taxed equally in the hands of both husband and wife, rupees 4 lakhs each, both the husband and wife would be required to pay 30%, that is 1.2. So this is how they can save 1 lakh, 1.2.
Do you have any questions?
Right?
Anyone out there?
1,20,000, right?
Is it clear?
So
To
please be
everyone now.
regular in class. It's a kind request. Okay. And Kaushik sir would be taking your class from next time. Okay. Today he was a bit low. I told you about the incident which happened in his family, right? So he would be commencing his classes from next time. I mean, he will be taking your classes from next time.
Right.
I hope I was able to do justice with the subject.
No.
Okay. Don't forget to fill the feedback
Let's
form
proceed.
and please
Let's
be regular
switch
in
back.
class. Okay. Sure. Thank you so much. Great day. And if you no, his premature kid died. Actually, he was born 3 months before. I mean, 3 months back, and he was, he was in.
If the intimation of death is received in 3 years after the date of policy issue, there is reason to be suspicious. The matter can be decided only after detailed investigation. Fine?
Yeah, so he would be taking, he is a bit fine now. He would be able to take classes from next time. Okay? So thank you so much.
Is it clear?
I know I'm not as good as him when it comes to this subject, but I hope I was able to do justice with the subject. Okay? So thank you so much. See you. Take care. And don't forget to fill the feedback form. And if you have any suggestions, okay, any grudges or something, you can just fill.
Okay, let's proceed ahead.
Fine?
No,
Take
let's
care.
go.
Bye.
Now, non-life insurance claims, what are those?
Is everyone there? Payments of claims is primary service is insurance to the public. Property settlements of claim required a sound knowledge of law, principles and practices governing insurance contracts and thorough knowledge of policy terms and conditions. The settlements of claim involves examination of the laws in relation to coverage under the policy and compliance with policy terms and conditions and warranty. Doctrines of proximate cause provides guidelines to decide whether the loss is caused by an insured peril or an accepted peril. Now, the burden or onus of proof that is the loss is within the scope of policy is upon the insured. Fine. Okay. However, if the loss is caused by an excluded peril, the onus is on the insurer. Compliance with conditions precedent to liability has to be confirmed. The survey report will indicate whether or not the warranties have been complied with. Observance of utmost good faith by the insured is to be verified. After the verification, the amount payable has to be worked out, which would depend on the sum insured, extent of insurable interest, value of the salvage, application of conditions of average contribution and subrogation. Claims can be categorized as standard, non-standard and ex gratia. What is this ex gratia? Do you have any idea about it? What is ex gratia? Do you have any idea about it? Anyone out there? What is ex gratia? Yes, correct. Period. Now, so we are going to continue with this in the next class. Fine. If you have any questions from whatever I have taught today, please do ask me now.